Hi, everybody. Well, that was interesting, wasn't it? Just when it felt like the markets were just starting to coast along, smooth sailing, everything was looking good. Bang, this happened this weekend, right? And just days ago, all of the headlines were talking about how both the bulls and the bears were feeling surprisingly optimistic about 2026. Then a sudden pullback grabs everyone's attention and reminds us the markets like to keep us on our toes. So today, let's slow it down and talk through the three things that retirees really need to know right now. What caused the pullback? What are we seeing underneath the surface? And why your plan is already or should already be built for moments like this. So the market pullback was complex, of course, but it was a reaction primarily due to renewed fears of a U.S.-Europe trade war that was sparked by escalated threats on tariffs for European countries unless they agreed to sell grain to the United States. There was also critical comments about NATO and the Japanese bond market experiencing significant turbulence. It was driven by uncertainty. Think of April of last year and all that tariff talk and the result of that. Uncertainty results in a risk-off settlement, selling and taking profits, especially in that tech market that's been appreciated so much. This is what normal volatility looks like. This is what we've been talking about in each video, kind of what we're expecting to see in 2026. But for retirees, it's really important to remember that short-term markets, they move headlines, right? They get our attention, they make great segments, but they don't change your retirement plan. Your retirement plan is built on hard work and planning. And so if we dive through and go a little bit underneath those headlines, what we'll see is that there's a market rotation going on. And when we think of markets, historically, and upward markets, they're led in a familiar pattern. Typically, NASDAQ's the leader, followed closely by the S&P 500. Dow is kind of middle of the road. And then small caps and finally international could be laggers and usually really volatile. But 2026 has kind of had a flip that's drift around, and it's actually nice to see. We're seeing small caps this year to date, which is only like 20 days, right? Up about 8%. International stocks that did great last year, they're up about 3.6%. The Dow is middle of the road again, but the laggards that right now are the S&P and NASDAQ, so a little bit of a flip. And that tells us that the market is rotating away from just that magnificent seven. And we like that. We don't want all of the growth going in just seven stocks. We like seeing that spreading out of the returns. That kind of leadership rotation reduces concentration risk and creates a more balanced opportunity across your portfolio. So for long-term investors, especially retirees and people getting really close to that retirement age, this is a sign of a healthier market, not necessarily a weaker one. And so, to me, the last thing that I wanted to discuss was, is your plan built for this? It should be built for three things, right? It should be built for volatility. That's what the stock market has historically done. It should be built to match your income needs, whether they're for income or required minimum distributions. You don't want to be forced to sell at the wrong time. And then also inflation protection, so that your purchasing power keeps up with your real life. Pullbacks, rotation, headlines, noise, they're all an expected part of the journey. A well-designed retirement plan doesn't focus in or rely on perfect market conditions. It's designed to work well because the markets are imperfect. So yes, this weekend reminded us that the markets can change at the flip of a switch really quickly. But it also reminds us why diversification, income planning, and a disciplined strategy matters so much, especially right around those retirement years. So if you'd like to talk to us or update us on your income planning or your needs for your portfolio, give us a call. We always love to check in. And thank you for watching. Take care and see you soon.